Hey everyone, checking in on the MJ sector. Going to spend a good chunk of time talking about CGC first off because we had a bit of a fake out today and want to go over exactly how that played out, the trade game plan, how to manage when things do not go according to plan, and all that good stuff. So it was FOMC day. We knew 2 p.m. Eastern was going to bring a good amount of volatility. We certainly got that in the market. It did favor the bulls, but the volatility for CGC occurred before that happened. So when we see equilibrium breaks, the things we need to see are number one, obviously a break of the key level, whether it's support or resistance, and number two, volume, and number three, follow through of multiple resistance or support levels breaking. So we got the volume. It was very clear early on that we were going to see a high volume day. We got the signal for a bull break of 48.01, breaking the lower highs. Then we failed to break 48.90. Now, it's not necessarily required that we have to break that level on the same day, but what it does is it completely shifts our confidence if we do break multiple resistance levels. In this instance, we pulled back 30 cents shy of that level, and we are left with a big upper wick. This reminds us of the fake out day that we saw back on March 6th, where it was a similar bull break, and then we pulled back. So at this point, you know, I talk about correlations all the time, and it's very easy for me personally to rationalize what played out because of S&P 500 correlation. And again, this just comes from literally over the last 2 years of trading CGC. I would say 95% of every single trading day of the last 2 years, I have watched the 5-minute time frame of CGC and the 5-minute time frame of SPY next to each other. So correlations break when you see volume come in to one individual name. That's why news releases break correlation. And today, the 5-minute start to the morning on CGC was raging bull volume. And this had nothing to do with SPY because this was all volume individual to CGC and didn't really have anything to do with what's going on in the broader market. So a huge bull move. I personally entered on the way up, seeing the volume, seeing that, you know, the bulls are clearly going to test 48 resistance today. I made my first initial entry right around, my average ended up about 47.80. I made one little entry and then I made a second entry on this consolidation before that $48 level broke. So because I am entering on a daily signal, I'm anticipating it's going to be a swing trade. And because I'm anticipating it's going to be a swing trade, I'm using a smaller position. My swing trade positions are about 1/4 to 1/3 of the size of my day trading positions because my day trading positions are larger because I'm in complete control. When I'm swinging overnight, I am giving up control to a certain degree by, you know, obviously not being able to have influence or enter or exit my positions based on whether we get higher opens or lower opens. Yes, I can trade in extended hours, but in general, you have less control when you're swing trading. The other reason is that when you are getting these breaks, they're on longer term time frames, and the key support levels to be basing stop losses off of are a lot further away. If I'm trading on the 5-minute time frame and I'm scalping, my 5-minute support is going to be right nearby. Whereas, and that's my exit signal if it were to break. Whereas on this kind of move, we get the bull break, but you look at the hourly time frame and the last support nearby is the low of the day, and there's nothing else. Now we make a bit of an assumption that we're going to form an hourly higher low when we consolidate because the move is so big, but that opens up the possibility that we either see this kind of pullback, which indicates an equilibrium is the likely setup, or a bull flag, which would be the ideal setup. So where were the red flags today that we were going to see a fake out and a bear break? So at this point, this is all completely healthy, completely normal. High of the day, we established a higher low. We didn't see any 5-minute consolidation on the way up. So that's our new support level, 47.59. We set the lower high at 48.38, unable to break the high of the day. Still no red flag. We know we need some hourly consolidation. Let's see if we can get a healthy higher low. The 15-minute needs a higher low. And then we pull back here and we're heading down to test our support. Now, the change of the 5-minute trend isn't a huge red flag, but what stands out? Look at what happened. Why is this volume spiking? Why are we seeing 15 minutes of a pullback? And why is the price dropping in that 15-minute period over $1? And the answer is, number one, stop losses being triggered from this 5-minute support breaking. I do not think that's a significant amount of this volume. What I think this volume is from is the S&P 500 correlation. Why do I think that? Because at that same exact point in time, and let's get it down to the minute as far as watching this correlation, the break on CGC occurred at 11:52. What was SPY doing at 11:52 a.m. this morning? And the answer is breaking the low of the day. So we hit the low of the day by 1 penny. That's technically, we'll call that a double bottom. And then we bounced. And then at 11:52, we hit the low of the day. So I have no doubt in my mind, maybe I'm wrong, but I am very convinced that the SPY hitting a new low of the day was the signal for correlation, for bots, for traders who are watching both to sell based on that event taking place. So as soon as SPY hits a low of the day, literally to the minute, we see CGC bear volume pick up for 5 minutes with a lot of unloading, and then that starts a bear momentum move where we just consolidate for the rest of the morning. So if we just overlay SPY on CGC to see more than just that to the minute lineup of those tickers, we can see that we hit the low of the day as soon as CGC got its bear break. SPY was hitting the low of the day. The bounce took place at the same time. A new low of the lower low on this pullback on CGC is lining up with SPY setting a new low of the day. And this was actually Trump putting something about, China tariffs out. And then we saw SPY weak bounce attempt. CGC did end up getting one more new low of the day. It ended up being a bit of a descending, or I should say a falling wedge. And then we got the bull break as SPY got the bull break. Then, if we want to talk about real correlations, look at what happened after the FOMC. They're literally the same chart. CGC and SPY from about 1:30 to the end of the day. I mean, most of this you can't even see because they're literally doing the exact same thing. So, in my opinion, the new low of the day on SPY was a clear switch being flipped. And as soon as that switch flipped, we said, all right, this is going from very healthy normal consolidation, and now it's more than that. But that being said, we zoom out to the hourly and we know we are still likely to form an hourly high or low. We just know that it's less likely to see afternoon continuation and more likely to see an equilibrium. And that's exactly what we have. CGC at this point is still in a daily uptrend, a weekly uptrend, an hourly uptrend, a 4-hour uptrend. We're still in an uptrend all over the place, but there is a clear red flag that's staring us in the face. And right now, SPY is down 60 cents after hours. So if SPY breaks the low of today tomorrow, in my opinion, CGC will break this hourly pattern bearish and will be heading down to our next support, the must-hold daily level of 44.97. So the last 2 days that we've had fake outs on CGC were March 6th and March 20th. If you look at SPY on March 6th and March 20th, there is a clear pattern where here is March 6th, right in the middle of clear bear weakness in the S&P 500, and here is today, the start of consolidation after 8 very bullish days. So correlations come and go, absolutely. No, CGC did not see this bullish correlation on the S&P 500. You look at other names like ACB, and ACB absolutely, in my opinion, saw help from the S&P 500 on its move up on the daily time frame. If we're just going to overlay those charts real quick, we can see, look at the daily time frame here. The low of ACB and the low of SPY are on the same day. The high of ACB and the high of SPY are on the same day. The 8-day bull run was the same for those two tickers. So in my opinion, I keep talking about the overall market environment. If I'm trying to grow crops and I've got the weather, the S&P 500 being my weather, and it's, a stormy day, I'm not going to have a good job. I'm not going to do a good job growing the crops that day. If it is a sunny, perfect day, my crops are going to thrive. So my crop would be CGC, but there's such an impact on the broader overall environment that it is trading in. So I would go so far to say that if we saw the S&P 500 this morning not break the low of the day at that point when it did for that clear little flush, trying to get where we are here. So right here, if we were to see SPY hold that level, that's too many lines, but if we were to see SPY hold that 2108 level and then turn around and break 281.85, in my opinion, CGC would have given us an hourly bull flag of very healthy consolidation and probably would have closed strong as long as SPY closed strong as well. But it was that clear bear break and new low of the day triggering that selling on CGC that completely changed the tone. So I believe that SPY completely dictated what the hourly consolidation looked like today on CGC. And it's just bad timing. We talked about it sometime in the past couple videos where I was saying that, these bulls have been thriving like ACB. They've been running in as favorable market conditions as you can see on the S&P 500 in the last 8 days when we were just going straight up. And if you get bull breaks like we've seen on APHA and now CGC, APHA 2 days ago and CGC today, here's APHA, we got the bull break without much follow through. 2 red days, or I should say 2 consolidation days on APHA, 2 consolidation days on SPY. It's just bad timing that the CGC bulls are making their move to get the breakout on a day of S&P 500 consolidation. If this bull break happened multiple days ago and the volume poured in and we broke 4801 and SPY had 2 more green days coming behind it, in my opinion, it would be a completely different scenario. So I know I'm all about correlations. That's just the way that, observing everything that I have so closely, again, to a sickening level with the amount that I have watched these 5-minute, 1-minute, 2-minute timeframes every single day for years, that is what I have come to the conclusion to, that SPY is the backbone of absolutely everything. Can we break correlations? Absolutely. But as soon as that volume dries up, and the CGC volume dried up on healthy consolidation, which exposed it to the SPY correlation. If SPY had hit a new low of the day at 10:05 in the middle of this bull volume surge, CGC bulls would have completely disregarded it and kept strong, in my opinion. But it's because it was the timing of a lack of volume. Look at the volume just drop off. So bull volume has disappeared from CGC. Here's the correlation taking place and shifting things. So again, you can have a different opinion. That's completely fine. I'm not saying I am right. I'm saying I think I'm right in terms of the importance of the S&P 500 in this sector and every single sector. So, and more so on the major names that are traded on the major exchanges, because there's, without a doubt, way more bots and algos linked between the S&P 500 and individual MJ names when they're trading on the NYSE or the NASDAQ than there are on names that are not trading on the NYSE or NASDAQ. So we have an hourly equilibrium to be watching into tomorrow. A break of 46.29 is a bear break. A break of 47.49 is a bull break. If we break that resistance level, we're looking right back up towards 48.60, and the bulls will still have another chance. If SPY breaks the low of today and we see CGC break 46.29, we have to be very cautious because we're right back to where we were square one, and there is potential that we could be heading back down towards that key 47, make that 44.97 support level. So I personally am sitting in a red position right now, but because of the position size, it's no big deal. It's right now at about a 1-day loser, which, I can make back with 1-day maker tomorrow. So it's not enough for me to be concerned about at this point. I will exit on the hourly equilibrium breaking bearish. I'll take my loss and then I'll move on to the next trade. So important to factor everything in to have ideal conditions. If we're going to be playing aggressive with high conviction and high dollar amount of what we're playing with, if we're playing aggressive, bottom line, we want everything in our favor. We want our stock to be in an uptrend. We want the S&P 500 to be green. We want, a lack of resistance, ideally blue sky breakout on our stock. And at any point in time, we don't have all wind at our back on the trade with everything in our favor. That should have us slow down aggressiveness, slow down with our position sizing, and reflect that not everything is ideal. So the fact that SPY was red today and pulling back, it was not the ideal kind of day that we're going to see a big breakout. And also the sector. I mean, CGC had a great start to the morning, absolutely. But you look over at APHA, ACB, Cron, there was some red out there. So we know it's not, everybody going forward, which is the ideal scenario as well. So again, learning experiences, it's no shame in taking a red trade, especially when you can keep it ideally to a lesser degree of, you don't want to take a huge hit. But let's say the scenarios of how this played out. So I'm in my trade. I'm using the longer term timeframes and the hourly uptrend as my guide for my swing trade. If I were looking to play around and actively trade with what was going on today, the last thing I want to do is continue to scale into weakness when that was not in my game plan. Because if it's not in my game plan, that means my position sizing did not anticipate adding more and more shares. And just like that, my position size is going to be too large and I'm going to be overextended. And that's the last thing you want to do. So worst case scenario is scaling in and averaging down when it's not in your game plan. That is the last thing you want to do because it magnifies losses. Another thing which I ended up doing was I entered SPXS on a little bit after the new low of the day. I didn't have the ideal timing, but as soon as I saw SPY hit a new low of the day and show us some weakness, and as soon as I saw the effect that it was having on CGC, I quickly grabbed some SPXS shares, which is a 3 times leveraged bear for the S&P 500, which that means that if SPY is going down, I'm making money on that trade while CGC is going down and losing me money. So it softens the blow to a certain degree. So I was able to, again, I am in the red on the trade, but it's a lot less significant than it would be if I wasn't counteracting. So there's ways to hedge as well. If you start to see red flags, and again, the first red flag was not given until right here at 11:45 into 12 noon. But if you start to see that, there is a potential that you can hedge, entering another MJ name bearish, entering the S&P 500 bearish, or just lightening up your position. Even if you're not exiting your whole position and taking that whole loss, take half of that position as a loss. Maybe you want to reload that cheaper. That changes things as opposed to averaging down and getting into a fat position that you weren't planning on. If you sell half at a small loss on that bear break and then look to reload it, 40 cents cheaper, that lowers your cost basis a little bit. You're in the same size of position that you had initially intended on getting in, and your average is a little bit lower. But the bottom line is when you're buying into a bull break, oftentimes there's a lack of support nearby. So it's hard to establish where your stop level is. And that was the case today very clearly, where we had no, hourly support level because we're still in an hourly uptrend at this point. Whereas if we had a clear hourly support at 47.50 and then it broke, that's easy for us to say, all right, hourly higher lows have broken. That's a longer term time frame red flag, and we want to be out of that trade. So entering into bull breaks, again, another strategy that I'll do is I will enter into a bull break with a big position, and this would be, in hindsight, would have been a good move today. Enter on the 48 break, exit half into profit, instantly lowering my cost basis to where break even would be, and then I could keep the second half of my position as a swing as initially intended. And what that does is just freebie of lowering your cost basis. So if I were to enter at 47.80 in a sizable position, too big that I wouldn't want to swing it, and I sell half at 48.30, I just lowered my cost basis to 47.30, way cheaper, and I'm in a much more comfortable place as we do fall back into that consolidation. So those are a bunch of different ways to manage the trade. But again, last thing you want to do is average down when that's not in the game plan. So this is going to be a long video. So we're now going to look at Cron. So Cron is still in a tightening range where we have our resistance that did not break 22.34. We rejected from a lower high just yesterday at 22.04, and now our only nearby support short term is 20.36. For the bulls to change this daily trend, we have to hold 20.36 and break 22.04 and 22.34 because that second level is right behind it, just 1%. We want to ensure that we break both of those levels in order to get the conviction on that follow through. But we're in a tightening range that we've been within at this point for the last 7 days, obviously not seeing any correlation to SPY strength over these last 8 days. Money has been elsewhere in APHA and ACB, but at this point, I don't like the clarity on Cron, to be completely honest. And bears can be looking for entries as well. If we break these daily higher lows on these major names and the S&P 500 gives us consolidation, we're going to be looking at the potential for some bears to make some profit. But otherwise, just waiting for this tight range to break. It's an equilibrium now at this point forming. We're waiting for CGC's tight daily range to break. Obviously, it broke without any follow through. Still a daily uptrend, still an hourly uptrend. As long as we can hold 44.97, the daily uptrend is not lost. But again, that wick is absolutely a red flag that should have bulls cautious and should have bulls, preparing for an exit plan if that is, if they're looking shorter term. ACB, this is perfect consolidation. There is no stress whatsoever for these ACB bulls. This is a potential bull flag on the daily chart. The hourly time frame, we had a double bottom, the low of pre-market, and this is why if you're trading the Canadian side of things, you got to be looking at the US because there was a clear support level at 950 from the low of pre-market. We bounced to the open, we dumped right at the open, and we held support by 1 penny. So that's a double bottom at the low, and we instantly bounced back up for 4%. So without pre-market on, you have no idea why we bounced at that level, and with it on, it's very clear that that was the only support nearby, and the bulls defended it. So we have our high of the day, 995, our higher low of 955, and we're seeing if this is going to be a lower high at 983 as we have a tightening hourly range. If we break the hourly chart bullish, change the trend bullish, the daily higher low is established and it is a likely bull flag. If we drop to lower highs and lower lows and break 950 support, the odds of a daily bull flag will decrease significantly. We're still going to form a daily higher low because the last one was down at 733, but it's just a shift between going from a likely flag scenario to a likely equilibrium scenario. And again, SPY is probably going to dictate which it's going to be. Just like in my opinion, SPY dictated that CGC was going to be hourly equilibrium today and not an hourly bull flag because of its weakness. If we see a red day tomorrow on SPY and SPY breaks the low of the day, we're probably going to see ACB come back down and test 950. And if it breaks, then the equilibrium will be more likely than a bull flag. If SPY is green tomorrow and completely turns things around and looks for some continuation, then the odds of an ACB bull flag will be high. APHA. Also just fine overall. Anything above 938 is a higher low. The bulls in this sector have a lot of comfortability of space to work with to maintain the daily uptrend. Some names more than others. ACB and APHA more so than Cron and CGC just because of how earlier in the week has gone. But declining bear volume, lower high and lower low on the hourly, but not a ton of bear follow through. We're watching for an hourly trend change to indicate that the daily higher low has been established, and we'll see if the bulls are able to set a daily higher low and try and break the double top at 1068. So again, no major red flags. We will see red flags on volume and follow through for the bears if we see it on SPY, in my opinion. TLRY. Higher low formed here. Again, TLRY is choppy as well. I don't like the clarity on this chart. We're looking for a weekly lower high to be set compared to 83.10. Anything under that keeps the bears in control. It's a potential little weak weekly bear flag at this point. But we have a new support level at 68.25. And as far as resistance goes, we're looking at 71.25 and then 75.55. And I'd be looking for a 4-hour equilibrium where we have the high and the low on the same earnings reaction candle. A lower high was set. A higher low is trying to set. And if the bulls can break 60 or make that 71.25, our 4-hour higher low will be set, and we'll look for another lower high compared to 75.63. So 4-hour clarity is a little bit better than the daily chart with all that chop due to the earnings report and the gap up open and the big pullback. So I would zoom into the 4-hour. And that's what I'm doing on all tickers that I'm analyzing. I'm looking for what is the most clear time frame. If the daily is not looking clear, I'm looking at the weekly, I'm looking at the hourly or the 4-hour because I want clarity, and then I can go from there. And if none of the time frames don't have clarity, then I'm not trading that ticker. HEXO, again, no major red flags, declining volume. A daily higher low is very likely because the last one was 685, so bulls have tons of space to work with to maintain this uptrend on the daily chart. We need to change the hourly trend back in favor of the bulls. Lower high at 926, lower high at 908. So just clear hourly lower highs and lower lows still. But when we change that hourly trend, the daily higher low will be established. If we break 883 tomorrow and continue pulling back, then the odds of a daily equilibrium will be more likely than the odds of a daily continuation move. The size of the pullback percentage-wise gives us the indication of what is most likely. OGI, blue sky breakout, significant follow-through, clearly stood out as a lead bull today. We broke 950, and the follow-through on that break of 950 was huge. We broke from 950 and we went to 982. So an instant 3% bull move over that level. And then we came down and did see profit taking at the end of the day. And we actually had a double top from earlier in the morning that finally broke bull after just nice contained consolidation. And on the hourly, you can't have better 4 hours of consolidation than that. Just, I would certainly still call that a bull flag, a little bit extended, but just ideal consolidation into the bull break. OGI bulls are clearly showing us that they have a lack of trust holding overnight in blue sky breakout. I don't think we've seen this in any other individual name where bulls are looking to exit rather than try and see strong closes. And this is consistent for OGI, and I do believe that it was all stems from OGI hitting blue sky breakout and putting out that dilution news to burn bulls that swung. And bulls have a memory. Everybody has a memory. And they remember getting burned, and they're going to lock in their profit rather than hold overnight. And this is probably the third time we've seen it on OGI, so it does stand out. But interesting that that is playing out on OGI. I think that's a nice psychological study of what's going on. But either way, hourly high or low, anything above 935 keeps the bulls in control. And we'll look to see if we can recover a little bit from the end of the day profit taking based on what happens tomorrow. If we break 946 tomorrow morning, then clearly further profit taking is coming. If we hold 946, we'll look for a potential test of that all-time high, but it's currently multiple percent away. TRST, also extremely healthy consolidation, no red flags. Double bottom the last 2 days, 1268. If we break 1268, we look for the daily high or low to form. If we hold 1268 tomorrow, that's definitely a vote of confidence for the bulls. It is a daily inside bar, so we need to see a break of 1310 and 1320 for us to be looking at blue sky. Actually, it's not blue sky, but continuation of this bull move. So again, another name that is consolidating absolutely, but it's very favorable consolidation with no red flags. Who was supposed to be here? Not sure. VFF. Another name, very healthy consolidation. Hourly chart dipped down and saw a massive bounce. These bounces on VFF have been great consistently time and time again. The 5-minute RSI, let's see how oversold we got down in the low. To start the morning, 5-minute oversold RSI straight into a 10% bounce essentially. And then we faded again. So the hourly chart is tightening up. We have our low and our high of the bounce. Our higher low has formed at 2070. And we're watching to see, is 2181 our lower high? We didn't get enough information by the time the day ended. So we're watching 2070 and 2034 supports. And if the bulls can show up tomorrow morning and break 2081, that'll be a good sign to potentially look for the daily bull flag to be in play still. So again, another name, just like ACB, very healthy daily consolidation. Uptrend is not at risk of being lost anytime soon. T-God on the daily pulled back in reaction to the earnings, a gap down open. Again, daily high or low, anything above 426, the daily uptrend is not in jeopardy. The size of the pullback means a bounce and a lower high is more likely than a bounce into continuation. So we're looking at the hourly for a trend change. We do have a higher low at 505. Bulls would have to break 516 tomorrow to change the hourly trend and have us look for that daily higher low to be established. So everybody's hourly is important because that's going to dictate whether the daily consolidation is done or not. CXXI, bull break. Have to be cautious on this one. There's a lot of people with big money trying to run this one and sucker in some small money. Just talking about social media and not liking what I'm seeing with how people are participating in this space. But regardless, when you see a name like this, it is way easier for an individual to break correlations. We talk about correlations on a name that's moving $1 billion like CGC. Correlations, you're not going to be able to break them. You're going to have to see, tons of volume to break those correlations, and it's more susceptible to SPY correlation because it's traded on the major exchanges. On a name like this, if I have $1 million, I can make a huge impact on what happens to this price. And to a certain degree, I can shape the chart the way that I want. Back in the penny stock trading days, I would witness people intentionally paint the close. And that just means running the price up at the end of the day, having cash to do so, ensuring a strong close, ensuring that the chart looks a certain way. So you do got to be very careful here. Just the volatility. I mean, playing a name like this is way more gambling than playing, or I should say trading, another name, that isn't susceptible to this. But just the fact that we can pull back 10% in a couple hours is high risk, especially when we've run so much in the last few days. So at this point, the short-term support level is going to be $2. If we break $2, we're looking down at 184. On a bull move tomorrow, if we can't break 229, we'll look for a tightening hourly range to form. But again, just a word of caution on a low cap name. And, you have the sector euphoria, you have the FOMO going on, and you have people looking to get in on a low cap and try and see as much dollar volume as they can to help push the price higher. If I'm on social media and I'm saying, CGC is a buy right now, and I'm trying to influence the market to affect my position, I'm a fool because that's going to have no impact whatsoever. But if I'm doing it on a name whose, 20-day average volume is under $3 million per day, then that can have somewhat of an impact. If I get a few people in and they are trading with, $50,000, that's going to impact the price. So just be aware that these low cap names are susceptible to way more kinds of games than the large cap names are. NRTH daily trend changed, a little bit of follow through today. Hourly uptrend, is it still intact? The answer is yes. Key short-term support is 142, resistance is 148, and then the high of 154. If we break 142, we lose the hourly uptrend, and the bulls are going to have to hold 126 on the daily. But this is one of those moves where I was talking about the size of the pullback indicates that a lower high is more likely rather than just a V-shaped recovery. This is technically a penny stock name, so if anybody can do it and see the less likely scenario play out, a penny stock can do it if the dollar volume shows up. But just be aware that on this size of the pullback, it's a lot harder for the bulls to see straight into continuation than it would be if we only pulled back, down to 140 or so. So if we lose the hourly uptrend without breaking 169, we'll have a tightening daily range to be watching on NRTH. CWeb, pretty much the same range the last 2 days. And we have the key hourly support is 23.49. That's a higher low. Started to bounce at the end of the day. If we can't break 25.03, then we will have a lower high and an hourly equilibrium to be watching. If tomorrow we break 22.90, that low, we will change the hourly trend and we zoom out to the daily to look for the higher low to form. And the CWeb bulls are absolutely very likely to form a higher low because the last one was 1894 and we're still almost, 15 plus 20% above that level. So it's just the hourly time frame that's going to indicate, do we lose the trend or do we keep the hourly uptrend in favor of the bulls? IAN, most likely scenario is playing out here that we were watching for in terms of the lower high compared to 806 forming. It's now formed at 780, and here we are coming down to form the higher low compared to 651. This equilibrium is likely to play out at least until next week, if not into April. So patiently waiting for the hourly trend to change to form the higher low and see this range continue to tighten up. And it's the same for MedMen. Most likely scenario playing out, we were looking for the lower high compared to 447. We have gotten it now. Lower high is 425, and we're going to be looking for a higher low to form compared to 355, and for this range to continue tightening out. They're very similar patterns on the daily. I think I said that yesterday as well, and different standpoints of where they're coming from, but the daily equilibrium is shaping up. Close of the low of the day 2 days in a row for MedMen. Week close for IAN 2 days in a row. Very similar daily equilibriums tightening up. So I did a lot of rambling. Obviously, I like correlations at this point. And for me, it just makes so much sense. And trying to convey that as best I can. We'll see what SPY does tomorrow. SPY is very interesting. I'll go over it in the market video. But another thing that I wanted to do that I didn't do before this video, I was supposed to talk about the banking bill as well. But what I didn't do is I want to look back and see for all the major names, the names that are moving billions of dollars, CGC, APHA, ACB, Cron, for their major bull runs, I'm not just talking about a green day or two, for their solid bull runs, what was SPY doing at that time? And I think you're going to find way more often than not, SPY was in the green to support those moves as opposed to SPY being red and those names going counter what SPY was doing. Yes, when news comes out, when CGC puts out news that they're going into industrial hemp in New York, doesn't matter what SPY is doing, dollar volume surges in, pushes the price up regardless, breaks all correlations. But absent of those major news events causing influxes in volume, the volume is in large part derived from strength in the market, in my opinion. So banking bill that we need to be watching in the sector, it's going to affect the US MSOs more significantly, multiple state operators. And if my political understanding is correct, it has to go through the House, which is controlled by the Democrats. Then it has to pass in the Senate, which is controlled by the Republicans. And then Trump has to sign it. So those are all things that we need to be watching for. It takes time. It's a slow, drawn-out process. We had the Canadian legalization just as a vote. We know that if this vote passes, if Trudeau wins, we're going to get legalization eventually. That was a very distinct time period, time event, a date. So, you're famous, see? So, she lost my train of thought. Succinct event. So when we don't have that, when we just have this slow ongoing event, it doesn't have the same power of funneling in volume all at a certain point in time. It's more of, a trickle. If it passes in the House, or if it looks like it's going to pass in the House, that gives us information. Then we have to go to the Senate. Looking at the likelihood of what's going to happen, whether it's going to pass or not, is going to influence how the sector responds to it, in my opinion. If this does pass, it is massive for the sector because it opens up the sector to investments from big companies, investments for banks. It's just a whole game changer. And it would just be step number one for a larger set of dominoes that we're waiting on in the US sector. We're looking for rescheduling. We're looking for, medical national legalization. We're looking for the Banking Act. We're looking for full-on legalization. And if one of those major events happens, it increases the odds and speeds up the timeline for all the other ones to happen as well. So keeping an eye on that. Again, it's not going to be a sudden event. It's going to take a long time to be drawn out, but we need to be watching for that as a major event in this sector. I'm losing my voice. Hope you have a good day. Do good things out there. We'll see you soon. Adventure Time, Chapter 11D7. We've got, where are we going? Curacanti National Recreation Area. And heading back, curling around from Telluride, through Red Rocks, back to Boulder, where I'm going to do the house sitting. So again, just more national public lands to check out. Hung out here all day and just swam and lounged around in the sun, and that was the day's task. As I hopped around, I got to the point where, I used to be able to drive from college to home. I would drive 14 hours, sometimes in a row, sometimes peeing while in cruise control. But I quickly burned myself out, and then I started to really only do 4 hours at a time. Anything more than 4 hours driving, and I get pretty miserable. And so I would just hop and find little spots along the way. I pick a spot on a map. I know where my destination is. And then I just zoom in and look for green areas on the map and national parks and national forests where I can stop in between. Sometimes out of the way, but usually not too bad. And some nice hikes along the way. More Curacanti. Again, just a big open giant lake where you can hang out, camp, do whatever, boat. It's ours. It's public. We pay for it. Take advantage of it. So string cheese at Red Rocks was a great time. First time at that venue, heading back there in 2 months to see my buddy playing Papadosio. That'll be fun. I'll take some more pictures and footage there. But just a really unique venue in terms of being surrounded by the rocks and obviously pretty iconic. And those are the rocks that are red. Baby chipmunk. So now getting back, and my task was to house sit for a month in Boulder and walk. This is Nina, and she is an Australian Shepherd. And man, if you have never seen Australian Shepherds, I'm sure there's a lot of work dogs that are up there in regards to it, but their drive is insane. And it's clear that they have been bred for thousands of years to just work, and that's all they want to do. And I have no doubt that, you could probably run this dog to death if you just threw a ball for 20 hours in a row. All she wanted to do was chase the ball. That's it. And she would do it for hours and hours on end. So it was nice to have a home base and be able to trade a little bit. I did some trading, be able to make food on a stove. That was nice. And just take care of the garden. She had a big old wall of peas and a bunch of raised beds that had been pretty developed. There's the backyard, a nice rainbow, great views. Pretty awesome backyard. There he is. So harvesting some cucumbers and beans and potatoes that were all grown in these little raised beds. You can see my matching pants. It's a funny story about those pants. I think I've already told it, but I'll save that for another time. Yeah, matching outfit. I don't know if you can tell, but I've been wearing the same outfit for 3 days in a row now. Whoever invented that you need to change clothes every day is a fool. I don't buy it. Some cool, they had what are these? Hot air balloons. They had a hot air balloon festival, so that was cool in the distance. I guess I don't know what that is. If that looks too big to be a dove, maybe not. Anyways, raised beds, nice and established. That's all you need. The amount of food that you can grow in this right here is pretty remarkable. And you can definitely feed a family on that. So get some raised beds and grow some food. So I didn't do a whole lot aside from, explore Boulder, do some hikes in the area, check out the restaurants, and trade and take care of the dog, and then moved onwards, westwards to Utah, which had some great spots, and we'll head there next. See you then.